Hey guys, welcome back. Quick episode update for you guys on the market at the moment because we had some really interesting price action overnight on the stock market and on BTC, and then some very interesting news coming out of Tether announcing that they're going to start purchasing Bitcoin regularly with the profits that they make from their company for holding holding dollars for USDT. Sorry, they hold a lot of government bonds and things like that, and generate a yield off that. They also get a fee from people from buying Tether as well, like exchanges and stuff like that. And they're going to start using those profits to actually invest into Bitcoin regularly. They haven't said when they're going to be buying or anything like that. I think that's part of their strategy, probably, though. But they said they're going to start buying from this month. So Tether said they'll allocate up to 15% of their realized profits from investments, excluding any unrealized price appreciation of its reserved assets. Okay, so this isn't like a UST Luna type setup. They're just using the profits that they're making to add to the balance to BTC when we're in the lows of this cycle. And in my opinion, that will pay off for them over the next 4 years, definitely. And they'll look to start taking profits on those towards the higher part of the cycle. This isn't actually something that's super new from Tether. They have definitely done this before to different variations, but it is news that they're going to start doing it again this part of the cycle. And from there, basically, we have had a really timely bounce off the bottom of our range low. So this wick here, which is the range low wick, is always going to be a really important level. And that news came out when we were right down the bottom here, about to break through that key important level. So maybe deliberately timed by Tether, who knows, along with some of their market makers to push the price back up. But what we want to see now is either, a bit more consolidation through here, and then we form a little sort of tight range through here and breaks the upside of that range. Or, this has a little bit of a hold through here, a very small range. And then, we do some sort of price action like that and start to push up back to the range highs, right? I think the most important thing to think about here, guys, is can we hold this level through here at 26,500? Because if that can hold, we continue going sideways through here for a little bit longer. And especially if we can get above this high through here, that sort of breaks this mini downtrend that we've been holding for a little while. And this will start to look a lot more like a falling wedge as well, right? So that's something to think about also. This could have one more up and then come down and break out like that. Or, maybe the whales have seen enough of a pullback and they want to push it up through here. And that's why they're releasing good news from Tether and stuff like that at the moment. So yeah, you have to see how this plays out. So I bought, as soon as that news popped in and I saw that we were holding above this level, I was like, okay, that just looks like a retest of the wick low through here. So I'm going to expect this to get a little bit of a rally, especially after we put in the double doji through here. So these are a little bit larger than what I usually expect, but for me, that's just like a tweezer type setup, tweezer bottom setup through here. And yeah, so I bought here before going to sleep last night, and yeah, up nicely, but not locked in 100%. This needs to make a new high to break the downtrend. So I want to see it get above this daily order block. And it definitely could range like this first and then push out. Confirmation that we're returning back to an uptrend would be a break of this downtrend through here, which is the blue line. Obviously clearing this level through here and then getting above 28,500 or 28,600 pretty much, which is the tops of this range back through here. I think that's going to be very important to signal continuation, right? Then the final boss for this range would be to take out 30,500. And then from there, I'll be looking for about 38K. So in equities, we were looking at this yesterday, and to be honest, it didn't look very good. It could have broken either way, but, this was sort of just forming a tightening range, and we broke to the upside, led by tech stocks. The NASDAQ pushed really aggressively. So the NASDAQ, in my opinion, now we can say that it has finally broken out of this range that it's been in through here. And that sort of gives me the indication that the ES could be getting ready to break out to the upside of its range as well. So keep our eyes on that. Still, any loss of this high level through here at 13,300 is going to be quite bearish, right? Because that will open up down here. And then if this breaks, then it opens up down here. But at the moment, we don't need to worry about that. Definitely tech stocks are looking really strong right now. Amazon pushing quite nicely. Even Tesla had a little bit of a bounce back. This might just be forming a bit of a flag through here, and then we get some sort of a breakout like that. Palantir looks like it's in accumulation through here, and it's starting to look like it wants to start moving up as well. MicroStrategy, very similar sort of chart structure to Palantir, just literally looks like an altcoin, right? So that's something to think about, because if these tech stocks continue to start moving up, Meta has been an absolute tear since it put in its low in November, pretty much when FTX went under the same date, stock market bottom, which is very interesting. But it's up 172%. Amazon looking pretty good as well. It just looks like, broadening descending wedge. Looks like the NASDAQ did before the banking crisis, right? And we're sort of just breaking out of that now. So a lot of the tech stocks are looking really good. Apple almost back to its previous all-time high. In fact, it's only a 5.8% move off being at its all-time high, right? Google has been ripping very aggressively as well. I think, they've sort of put to bed because they've just released Bard, Google Bard. Go and have a look at that, which is basically the same thing as ChatGPT, but it's better and it's also free, right? So, I think you just can't really mess with Google. They've just got way too much talent there. And, the reason why I'm showing you all these individual stocks, guys, is that is the reason why the NASDAQ is pushing, because all those stocks, they basically form a very high percentage of the NASDAQ. And also the ES. The ES is still getting weighed down though, because it's about 500 companies, whereas the NASDAQ is only 100. So that core group of companies, which is pretty much leading the market at the moment and holding the entire thing up, is more weighted heavily in the NASDAQ, right? So crypto generally sticks a bit closer to the NASDAQ than it does to the ES. And we have been more closely associated to gold recently as well. So that's something to think about also. Gold has been seeing a fair bit of selling pressure. I do think that it can range out here for a little bit longer before it finally makes its move. That could last a few months. So be prepared for that. But at the moment, the main thing I want to keep my eyes on is the ES or the S&P 500 and see if it can hold above these highs through here. So this is a really nice range high that we've put in, and basically price in the New York session made a really strong move, broke to the upside of this channel or range, I should say. And if we continue to flag here and then push again higher, breaking out of this range that we've been in for almost 2 months now. When did we get into this range? 47 days, pushing towards, so a month and a half, pushing towards 2 months. If we can break out of that, that's going to be extremely bullish, because price has actually been inside this channel for a long time now. Right, we've been around these prices for a full year now, 376 days. Okay, so a breakout of this level to come up and test the highs of 4,300 is going to be very interesting. Everybody is expecting it to revisit the lows, which could happen. I think this range in here is super critical. If this range ends up baking out here and rolling over and we break below here, then yeah, okay, it opens up backing to this target, opens up looking at this target down here, right, which is from this low, or a double bottom somewhere through this green box down the bottom, right, which is our current yearly low. So I should say bear market cycle low. So just something to think about, that potentially that doesn't happen. We do need to see things like unemployment start to rise. Is that if CPI continues to come down and unemployment doesn't pick up, and the Fed starts to pause, in the next FOMC meeting, or, they start to hint towards even lowering rates, we could see, you could see the stock market just slowly grind higher. Do this, put in another 45, 47-day range through here, and then, pop out again, move up to this level up here, chop around for a little bit, and then it just moves back into this, slow push higher and then grind again. If we go back and look at the stock market over its previous history, what we want to see is that volatility sort of die down a little bit, and it just, grinds higher, has a few pullbacks, grinds higher, pullback, goes into these big, long sort of ranges, right? What we're seeing, the price action, that choppy price action, what we're seeing, is similar to, this sort of range through here, this range here, right? That's typically what it does. Pullback, range, grind it up, pullback, right? And it just does that same thing over and over and over again. 2008 finished with this, great big climactic dump. And then what happened after that? It was just like range, grind higher, range, grind higher. Bit of a pullback through here. And then pretty much it was just range, grind higher, range, grind higher for, the next 14 years until, we had this incredible run since COVID, because so much liquidity was pushed into the market. So we could easily go back to this type of ranging, grinding higher type of market. And before everybody's realized that the market has actually shifted back into its normal state of being from this highly volatile, super dumping off bear market type action, or even sideways it's been through in here. Like this just looks like, sort of rally, and this just sort of like grinding higher. Now we have a little bit of a range, and if it could just rally up here, then grind for, 30, 40, 80 days, then grind higher again for a little bit, range again. And, it could be 2024 and we're pushing up, breaking out of this level at 4,600 before everybody even realizes that, the market is just back into its normal mode of being, ranging and grinding higher, and everybody's missed out on getting in. And if that does happen, that's what we want to see, for Bitcoin to break away and sort of run its own race, right? Because when the stock market is doing this in its normal state of being, that gives Bitcoin its freedom to run based around the halving and based around the supply and demand dynamics of the market a lot more freely. Because when the stock market is dumping off aggressively, it puts sell pressure, because everybody's panicking, about existential threats and all this sort of stuff to the markets in general, and liquidity crises and stuff like that. And, people get concerned to start to sell their Bitcoin. But if, we do flip back to just that ranging and grinding higher type market in the stock market, then that really enables Bitcoin to make its rally up to 38K or even 48K sometime in this year, before we chop sideways and pull back, and then we have potentially a pullback all the way to 30K, depending on how high we end up going this year. 30K or even 20K before the halving, which is due for April 2024. And then have the normal Bitcoin bull market that we usually see after halving. And if that coincides with the government doing massive stimulus plans, so infrastructure programs and stuff like that, to boost the economy again, because I do believe that we are going to continue to see the dampening effects of on inflation of raising interest rates over the last couple of months, and that will start to slow growth over the next 6 to 12 to 24 months, and that will slowly start to increase unemployment. And then once unemployment starts to pick up, the Federal Reserve think that we will start to see unemployment pick up to about 4.2% by the end of this year. If that does start to happen, and we start to get 4.5 or 5% next year, then that opens up the gates to interest rates starting to come down, and that opens up the gates to QE to start again, right? So when that happens and we do get liquidity coming back into the market, look at how close the US dollar liquidity is tracked by Bitcoin, right? So over the last cycle, that spiked when COVID happened, right? And that was when the Federal Reserve basically gave $2 trillion and the US government gave $2 trillion to BlackRock and said, support the market, right? And you see this massive pump, and it took a while for BTC to catch up, and then it just took off. But when we size it right, we can see that it came very, very close to the previous high. As soon as they started pulling back liquidity, or the liquidity pump stopped, BTC started to slow down. And then we had obviously the really big pullback. And then the market topped out around similar time to the BTC as well. So US dollar liquidity, right, got paused up here and didn't make a new high. And that was the BTC all-time high as well, right? So it doesn't match up perfectly, but you sort of get the gist that it's a very close symmetry, and it definitely rhymes with itself, right? And at the moment, we are having global liquidity, right, actually start to come down. So let me pull up down here. So USD liquidity is the green, global liquidity is the white, and Bitcoin price is the blue, right? USD liquidity is actually starting to push up at the moment, and Bitcoin has been pushing down. So it's going to be interesting to see if global liquidity starts to turn around, and that's going to be through the ECB, the UK, and also China and Japan issuing more liquidity to help their economies bounce back. They're still having, especially in the EU and the UK, they're having really big problems with inflation still. So the US is sort of turning the inflation corner first, and that's why they're able to keep on injecting USD liquidity. So if we need to watch this USD liquidity chart, if that starts to make new highs up through here, that really does open up the gates for BTC to flip 30K and at least make a run up to 38, in my opinion, while this pushes higher. And, we start to come up to 6.4 up to, 7 or 720 sort of levels, again, pushing to previous highs. And that will probably happen sometime during 2024, 2025, as the market, as the economy starts to slow down, to stimulate jobs and stimulate employment again, and getting the monetary velocity back up to higher levels after everybody starts to feel the squeeze of these interest rates that have been getting raised for the past year and a bit, okay? So that's basically how markets move. It's all about velocity of money, earnings for the bigger companies, and the liquidity that is put into the economy, which drives that money velocity. And then that money velocity, which is how fast people are changing capital, changing money through their hands. So I buy something, so I do a service for somebody, they pay me, or I make money from trading, and then I go buy a car, or I buy a house, or I buy food down the road, or I go to a restaurant, right? The speed at which I transact after getting that money in, that is monetary velocity throughout the economy. And when that slows down, we go into a recession. When that speeds up, growth speeds up, and spending increases, right? Which means earnings for the big companies increases. And when that happens, that drives the price of stocks higher, right? And when you have the price of stocks getting driven higher, things like Bitcoin as well are going to get dragged up with that. But also, the market moves first, and because we're already expecting it, it starts to get priced in as soon as this USD and global liquidity also starts to kick in, because we're expecting that monetary velocity to pick up, which is going to translate into earnings, which is going to translate into asset prices everywhere increasing, which of course, the hardest money on the planet, which is Bitcoin, that is going to get driven higher as well.